Okay, so we're right at the top of the hour, so we're going to get started. We'll probably still have a few more people signing in as we go. I want to welcome everyone to our webinar today. Today we're going to talk about you're checking out your flood knowledge and how having that conversation with your insureds is a really good idea. My name is Sandy Emerson, and I will be your host today. We also have on the phone with us the wonderful and fabulous Heidi Keibel, who will be running our chat for us today and adding some additional information as we go along. She'll also be doing some of the polls for us, so as we get going, we're going to have this first poll here, and Heidi, I will turn it over to you at the moment.
Thank you, Sandy. I just launched our first poll. This is kind of a twofer poll, two questions to ask. First, what do you feel that your level of knowledge is as we're talking about flood insurance? Are we basic, are we intermediate, or do we have some advanced people out there? Second, kind of to get to know you, is what best describes your role within your organization. Are you office staff? Are you an agent? Maybe you're an insured, or possibly do you work in the marketing department? People are answering. We're at about 75% right now, Sandy. Ooh, we just climbed to 78. We're going to leave it open for just a little bit. Hoping to get over 85%. We're holding at 81. We got pretty close. So let me go ahead and post our results. We kind of have an even split between those that are basic and intermediate. We don't have any advanced out there right now. And we have overwhelmingly some agents, but there's a couple of office staff in there as well.
Excellent. That sounds great. Well, guys, we are going to spend about the next 30 to 45 minutes together. Because of the time constraints involved, we do have your lines muted. But please, as we go along, if you have questions, ask them. We would love to answer as many as we can. When we go forward, hopefully we'll hit some topics here that everybody at least it will attribute to your daily process when you're talking about flood to your insureds on a routine basis. That's sort of the objective here is to get agents who aren't talking flood every day with their insureds to at least start thinking about it and start to get in the habit of having that conversation. So we're going to run through some of the flood basics here, the why and what fors. Get into a few slides with a few true and false questions and just kind of check your knowledge a little bit. Then we're going to give you some resources where you can get additional information or help that you may need. And at the very end here, we'll get down to who benefits from all of this going forward. So hopefully you'll pick up something new along the way, and if not, please share your experiences with us as well. I noticed that Heidi had asked where everybody was from earlier. To give you an idea, Heidi and I are both here in the state of Florida now. I am in the central part over in the Tampa Bay area, and Heidi's up near the Jacksonville area, so we sort of cover the gambit here. So first question, as an agent and when you're talking with your insureds, is who needs flood? The bottom line here is everyone. And if anyone tells you any different, they're not correct. The bottom line, and one thing I want all new agents to really keep in the back of their head is that there is no such thing as not being in a flood zone. You may be in a low-risk zone, but you're still in a flood zone, or that property is still in a flood zone. So anyone with an insurable interest in a building and or the contents inside that building has a need for flood. Remember that a flood policy can be written for owners of the property, renters of the property, buildings under the course of construction, condominium associations, the unit owners in those condominium associations. There can be coverage on a non-residential building, your commercial buildings. So if there's a structure out there and if it's in an eligible community, there is a need for that flood policy. Flooding is the #1 natural disaster in this country. If it rains where you are, it can flood. Think about this. over the lifespan of a 30-year mortgage, a structure has a 10% chance of experiencing a fire and a 26% chance of actually having a flood. Those are huge numbers. We're in the business of risk assessment. When you think about the difference between those exposures, again, it goes back to everyone has a need. So what's the first thing as a new agent or someone that doesn't talk flood all the time, what's the first thing that you need to know? First thing you need to know is, are they in that low risk zone or that high risk zone? If an insured has come to you for a quote because they're having a closing and the mortgage company has required them to get a flood policy, more likely they are in a high-risk zone. But run that zone determination, verify that's exactly where they are. If they're in that low-risk zone, and let me define low risk and high risk. Low risk is going to be anything in any structure that's in a B, C, or X zone, whereas a high risk will start with an A, or V is in victory. A stands for accumulating water, and V stands for velocity. So most of the V zones are along the coastline, but they can be around a large body of water, like Lake Michigan, Lake Superior, Lake Okeechobee. I know here in Florida we have a couple of V zones around Lake Okeechobee. So if they're in that high-risk area, the government-backed, and they have a government-backed mortgage, then again, they're being required to carry flood. And unfortunately, a lot of building owners, homeowners in particular, tend to think the mortgage companies have a crystal ball, and just because they're being required to carry it, that must mean if they're not required, they don't have that exposure to flood, which nothing could be more wrong with that statement whatsoever. The biggest gap we have are those insureds that are in that low-risk zone and don't think they actually have a need. If you take a look at this slide here, 25 to 30% of all flood insurance claims originate in that low to moderate risk, so those B, C, and X areas. These are the people who think they don't have an exposure. It's never going to happen to them. Maybe for some reason their mortgage company or their realtor or maybe their neighbor, someone has said to them, oh, you're not in a flood zone, you don't need flood. There, again, huge difference between need and required. Just because they're not being required doesn't mean they don't need it. Most people forget that the expansion of new building development will create new areas to flood. So what may have been an empty lot 20 years ago is now concrete. Now there is a commercial property there, or a new homeowners, or a new development, an apartment complex. In other words, lots of concrete. Now there has to be a new place for that water to actually run off to. It could very well be in that housing development that your insured is at. One thing a lot of people don't realize is once these events start to occur, these flooding events actually start to occur, these people in these areas may find themselves remapped into high-risk zones. And now they're going to be required to purchase a flood policy by their mortgage company. Whereas if they've purchased that low risk or the PRP, the preferred risk policy, before that map change happens, it may deflect some of the initial costs of now having to purchase that flood policy. Because remember, in the initial cost, you're going to have to, your insurance would have to include the elevation certificate, possibly pay the higher zone or the rate for that particular zone, or possibly even having to make changes to their structure to be compliant to keep the premium down on that flood policy. The other thing to remember when you're talking to your insureds, especially those that are in the low risk now and possibly have to be moved into a high risk later, is that these flood policies are transferable to the new purchaser or the new owner. So there's a lot of savings in there by just having that conversation with your insured before it's a requirement. So again, this slide here is a great teeter-totter view of what we hear, of what our mortgage companies are telling our insureds, because they translate that into, oh, I must not need it if it's not being required. Again, I can't say this enough. Not true. The federal government audits mortgage companies that have the government-backed loans. Therefore, in order to be compliant, to mandate, the mortgagor must provide documentation of a flood policy for those properties that are in that high-risk zone. The preferred way is, of course, for the owner to go out and purchase it, but they will force place it if they're in that high-risk zone and haven't purchased the flood policy as required, including those that go through those map changes. So don't be confused when you're talking to an insured about the difference between need versus required. So who's eligible to actually have a flood policy? Well, as this slide points out, eligible communities are those that participate in floodplain management and appear in the National Flood Insurance Program Master File. You can access this, you can verify these communities that are participating in your state by looking at the Community Status Book online with FEMA. A community is defined as a city, a town, a county, a township, a parish. It's not little small developments in those areas. It's the community as a whole. So basically it's everything but the state as a whole. So let's talk about real quick what is actually the definition of a flood. If you look at the NFIP flood manual, you will see, and I'm going to read this exactly as it is, what the definition of a flood is. It's a general and temporary condition of partial or complete inundation of 2 or more acres of normally dry land area or 2 or more properties from overflow of inland or tidal waters, unusual and rapid accumulation of runoff of surface waters from any source being the key phrase there. Collapse of land along the shore or lake or similar body of water as a result of erosion or undermining caused by waves or currents of water exceeding anticipated statistical levels. In the new summary of coverages that is being put out by FEMA, they've actually changed that definition a little bit. They've actually made it more simplistic in their words, and I want to read that to you. The previous summary of coverages that was out circulating listed what I just read to you specifically as the definition of a flood, but they're trying to make it more understandable. So now it actually says your NFIP flood insurance policy covers direct physical loss caused by a flood. In simple terms, a flood is an excess of water on land that is normally dry, affecting 2 or more acres of land or 2 or more properties. For example, damage caused by a sewer backup is covered if the backup is a direct result of flooding. If the sewer backup is not caused directly by flooding, the damage would not be covered. So this is what's circulating out there now as far as what the definition of a flood is. But it would still have to meet what the NFIP manual says, what the previous summary of coverages says, to meet the definition of a flood. So some of the key words in everything I've just said here is, of course, any 2 properties, not just any 2 buildings, but any 2 properties and from any source. So flooding can be from heavy rains, overflowing of rivers, broken dams, drainage issues, melting snow or ice, or even a water main break. I've been around the country several times, Baltimore, I think Madison, Wisconsin, where there were several water main breaks that were causing flooding in the streets, and in some cases in Baltimore area, it actually went into some of the properties, into some of the buildings. So it's from any source. It can be, we used to use a picture of a train that derailed and hit a water tower and flooded an area. So again, any source. So what's important with all this information to those of us who are agents? If we're not talking to our insureds, and I mean every insured that walks through that door, every quote that we're doing, every renewal that we have, we have an exposure, an E&O exposure, and it happens all the time. A lot of the insureds who filed losses during Katrina, Sandy, Harvey, filed them against their agents because they never had this discussion, that flood discussion. Failure to offer or not, I should say failure to not offer or not advising the property owner that they have an exposure for flood damage could easily result in a property owner having a big gap in their coverage. And after the loss, that discussion that never happened could very easily end up being an E&O claim. Remember, when discussing flood, that there is no binding authority. You can show proof of purchase, but you cannot actually, in writing or verbally, tell them you have bound that coverage. It's not covered until it's issued. Proof of purchase is not a binder. The policy is set up for one policy per building and one building per policy. And you always, when you're submitting an application, always want to verify that your information on that application is correct to the best of your knowledge. Make sure there's not any typos, especially in the address. You want to make sure that when it's sent over to the Write Your Own Carrier or the direct NFIP, that you've got everything on there correct, no typos, no misinformation. And lastly, remember when we're talking about the NFIP program, there is a 30-day wait on all the new policies written when they're voluntarily purchased, meaning not written with a mortgage company's request. So you want to make sure that they understand that, yes, the storm, named storm may be coming at us and it may be about to hit Florida, but if they're purchasing that flood policy today, there's going to be a 30-day wait. But in the big picture, as agents, account rounding with our insureds is one of the best way to have client loyalty. It's the best way to keep them on the books and keep them with you so that you can have these conversations with them. So you want to make sure that you are talking to everyone, as I said, when they walk in the door new or when you're quoting them. Okay, Ms. Heidi, we want to throw up our next poll question.
Okay, our poll question is active and live. This time we are asking, will a flood insurance policy pay regardless of a presidential disaster declaration? Kind of sneaky, Sandy, because you haven't really talked about that yet.
This is true. This is true. So it's going to be interesting. That was one of the factors that, as an agent, when I was working in an agency, that honestly used to confuse the daylights out of me. I could never remember which it was.
I'm hoping this time for 85% participation, and we're only at 78%. So there's a few people out there who need to help me get to that 85%. And I'm not going to get it. That's okay. Oh, wait for it. Wait for it. We're at 83. Almost there. Woo, we're at 85. Thank you, everybody. I don't know why that makes me happy. It just does. So going to end that poll. Let me share our results. We're not really close. We have 79% who think that yes, a flood insurance policy will pay regardless of presidential disaster, and we have only 21% who think no.
Okay. Well, we're going to address that here in the very next, this slide that's up, but the very next one. So we'll talk about disaster assistance as well. Thank you, Heidi. So let's talk about some of these true or false questions. These are bantered around all over the internet, actually. So the first one here is, homeowners insurance covers flood damage. True or false? Most of us will know for sure that that is not true, that is false. Most homeowners' policy exclude flooding. So without this flood policy, the homeowner may incur the loss out of pocket. There isn't going to be anything on that homeowner's policy that's going to extend over. Remember one thing, though, with flood, that it's only going to cover the building and the contents inside. It's not going to give them additional living expenses or loss of use. So you want to remember that they understand that it is just going to cover those physical items. But without it, they may get nothing. And we're going to hit up the disaster assistance here in just a moment. So our next question, you can buy flood insurance even if it's not required. Of course, that's true. As we talked about earlier, you're able to purchase flood insurance as long as you live in one of the more than 22,000 communities that participate in the NFIP program. There are places across the country that do not participate. They have elected not to be a part of the NFIP program. What a lot of people don't realize in that instance, when they elect to not be a part of the NFIP program, they also opt out of getting any federal disaster assistance as well. So without that ability, a lot of insureds their only option is to purchase private flood. So for the most part, for most of us, we are in participating communities, and our insureds should be able to purchase that flood policy. True or false, you can't buy flood insurance if your property has been flooded before. That is false. If a property is flooded before, the owner should be financially prepared for a flood by purchasing that flood policy. In most cases, remember, it has that 30-day wait. So you want to make sure that they understand that there is a gap there. But if even if they've had that flooding before, they still are eligible to purchase flood. So our next one here, true or false, a claim can be filed if there is not a disaster declared by the President. That is true. There does not have to be a declaration by the President in order for a claim to be filed under the NFIP flood policy. However, it doesn't mean there's going to be disaster assistance. There are a lot of instances where it doesn't meet the threshold for FEMA to actually come in and help those people affected by that flood. It happens all over the country. We here in Florida a few years ago had, I want to say it was Tropical Storm Debbie, I might be wrong on that came across the state, and a lot of counties just a little north of me had a lot of severe flooding, but unfortunately it did not meet the threshold of FEMA's help, and they were unable to actually get any disaster assistance whatsoever. Heidi, do we have some questions that we want to address? I see a few things popping up there.
Right now, we have no questions. You see some resources that I've put out there in the chat line that I think people are going to find helpful, but we've had no questions. I'm kind of talking to myself over here right now.
Okay, actually, I've had a couple of private ones here. I just realized that they say private, so I'm going to go ahead and answer those real quick. Yvonne has asked, can people who rent a house or an apartment purchase flood insurance? Yes, they can. In some cases, if they are in a high-risk zone, an A or a V zone, they may have to ask the owner of the building for a copy of the elevation certificate to have it rated correctly, but by all means, they definitely can purchase a flood policy as well. And Elizabeth asked, did I hear right? There is a 30-day wait when a policy is not required by the mortgage company. That is correct. That is a voluntary purchase, and there is a mandatory 30-day wait on all of those voluntary purchases. So keep the questions coming, guys. We'd love to answer them. So our next true and false here, only residents in high-risk areas should buy flood insurance. Well, that is seriously false. We've talked about that probably till you're tired of me talking about that. But remember, more than 20% of all flood insurance claims come from outside that mapped high-risk flood areas. Those of you in Texas, you know that when Harvey hit in the Houston area, a large majority of the people who were affected by Harvey in that Houston area were not in high-risk areas. And one of the things that I hear all the time from a lot of, especially in the middle of the United States, well, Harvey was a coastal storm, was it not? Well, yes, to a degree it was a coastal storm, but Harvey came inland and sat on the Houston area and beyond for, 3 to 5 days. I have friends that were 250 miles away from Houston and were completely flooded. They ended up with over 5 feet of water in their home. So it doesn't have to be just that named storm. It could just be a rainstorm that just sits and sits and sits, and that happens all over the country, everywhere. So our next question is, disaster assistance may be in the form of a loan that must be paid back. True or false? That is very true. Disaster assistance is usually in the form of a loan that must be paid back with interest. Consider this. If you borrow $50,000 at 4% interest, the repayment is about $240 a month for 30 years. That's on top of your mortgage. That's on top of the expenses that you've actually had to put out when you didn't have that NFIP policy. So on top of the loss itself, now you're having to pay the difference. So there is some grant money that is allowed. FEMA makes the decision as to how much that's going to be depending upon the money loss or the dollar loss in that event, in that flooding event. But the biggest form of help from FEMA is going to have to be paid back. And here's the kicker that a lot of people don't realize. If they're receiving that disaster assistance money for a flood loss, before they're allowed to get that money, they actually have to buy and purchase a flood policy, which will be required to be on that particular building, either the life of the building or the life of the loan, depending upon the situation. So it comes down to, it's just not a free lunch. There is attachments to getting that disaster assistance. Disaster assistance money is actually taxpayers' money. It's in the form of a small business administration loan, which is taxpayer money. That money isn't just money to be given up. It actually has to be paid back and accounted for by both FEMA and the insured, for that matter, to Congress. They want to know where that money is going. So our next question, there's a low-cost policy for properties in low to moderate risk areas, and that is true. Those are the properties those properties in the low to moderate risk may qualify for the preferred risk policy, or the PRP, which is a discounted rate policy from the standard flood rate. We hope to have an actual PRP webinar sometime next month, so please join us for that, because that's helpful for agents who are really trying to get their feet wet with the flood program. The PRP policy is the easiest to write, but the hardest to sell, because again, these are the voluntary people walking in and wanting to buy the flood policy as opposed to being required to carry it. But for those of you who are starting out, if you are working with the PRP program, you may quote it 6 or 7 times a day, but you might only get one that actually wants to write it. But at least now you have documentation that you've had that conversation with your insured, and they know what their risks are. But even if you only sell one, that's one more than you had yesterday. So it'll take time, and by starting with the PRP program, you'll start to learn some of the flood terminology and how the process is actually set up, because we learn flood the hardest way possible. Most of us as agents have learned flood by the seat of our pants. We didn't have a starting place, so to speak, because we've learned how to write it because someone walked in the door and had a closing next week. So it's definitely a nice idea if you can start with the PRP and just get your feet wet with it as you go along. So our next question here is, the NFIP policies exclude basements. Well, that's not really true. The NFIP policies do not exclude basements. However, they do limit the coverage in them. There is a list in the flood manual on the summary of coverages and the FEMA fact sheet, as well as the policy itself, that pinpoints exactly what is and isn't covered in a basement. It's worth taking a look at. We also, by the way, make another plug here, we do offer a basement and enclosure webinar. I think we just had it, so I'm not sure when it's going to appear next, but watch for that, because that's a great one to take as well. And back to that 30-day wait period. There is a 30-day waiting period for all new flood policies. Well, that's true for the standard day wait for the voluntary purchase. If a flood policy is purchased in connection with making, increasing, extending, or renewal of a loan, they will waive that 30-day wait. But if it is a voluntary purchase or they want to increase coverage, it's going to have a 30-day wait.
So, Sandy, before you get onto your additional information, Jeanette brought up a very good topic in our chat line, in that she just found out that she could not do a rollover with the NFIP because her customer's previous policy had a private policy. Jeanette, yes, that's true. Right now, the NFIP does not recognize really the private industry that much. They have one cancellation reason that even approaches the topic of private flood insurance. But yes, you can't do a standard rollover if your insured has a private policy. If they want to go back to the NFIP, they'll have to cancel and then write a brand new policy with the NFIP. So right now, those two organizations don't necessarily transfer those policies very smoothly.
Excellent. That's a great point, most definitely. So some additional information, as you saw when you signed in, if you signed in a little bit earlier than when we started, you saw the new nationalfloodservices.com website, or at least the first page of it. We have so many resources on that website now. It's very interactive and very informative. We talk about, we have tools for agents, we have the webinar schedule, we have videos on there. It's amazing what they've put together on this website as well. So take a look at that if you haven't already. A couple of other places you can go to for help is floodsmart.gov. There are two separate FloodSmarts. There's one for agents and one for consumers. They basically say the same thing, but it's just the way they word it. So take a look at those because there's a lot of helpful information on there as well. And of course now our flood manual is online. I remember the days when you used to have to purchase the flood manual because that was the only option, and it weighs about, what, 800-900 pounds at least. It was big. It was huge. So if you need help, you have any questions, you can at least go to the flood manual and take a look at it. They actually have all years on there, so you can go all the way back and even compare what it used to be to the way it is today. The other place to reach out to is FEMA does offer flood facts and publications online. There are different, like the summary of coverages, different brochures that you can actually download or order. They do mail them to you for free. The brochures themselves are free as well. They do, I think, sometimes limit you to how many you can order at one time. I believe it used to be 100. But there is a lot of resources out there to get help, to find additional information, marketing information. Again, the National Flood Services website has open areas, just about everything you can think of, they've got it set up for you. So going forward, now that we've talked about this for the last 30 minutes, who are the big winners here when you're having that conversation with your insureds? Of course, us as agents, we're certainly, we have to look at it from a financial point of view. It's money coming into your agency. It's money coming into your pocket. But it also helps to help your insurers, account rounding for them, keeping them with you, client loyalty, your loyalty to them. Of course, our families and our insureds, we're helping them because, trust me, that the last thing you ever want to get is that phone call from one of your insureds saying, I just lost everything from a flood, what do I do? And your answer is, I can't help you because you didn't buy that flood policy. Trust me, you never want to have to say that. That is just heart-wrenching. And of course, you've got your business partners out there that are in business too. Everybody's trying to, make a paycheck and enjoy their fruits of life, so to speak. So we get out there and talk to everyone about flood and kind of change the attitude about the flood program or the flood policies. A lot of agents are afraid to discuss it, and even more insureds have wrong information about it. It's very easy as a consumer to listen to your neighbor, your friend, your whoever, your husband, wife, what have you, when they are telling you, oh, no, you don't have to spend money. Oh, no, you're not in a flood zone, therefore you don't have to spend money. Well, any normal person is going to want to hear they don't have to spend money. But we as agents are speaking to them about their security, their home, their business, making sure that they have that gap covered, or at least understand that the gap exists. So many people don't even realize, don't even think it could ever happen to them. So think about this. Just 1 inch of water can equal $25,000 in damages. That's just 1 inch. And also put in perspective, we're not talking about clean, fresh water inside your structure, inside your building, inside your home. We're talking about water that's coming in from the outside. We're talking about water that has debris in it. It may have sewer in it. It may have critters in it. It may have goodness knows what. I don't even want to think about it in it. So put in perspective, you're not just going to pop up a few fans and dry that carpet out or dry that wall out. It's going to take professionals, and it's going to take money. It doesn't take long to add up a dollar amount in damages for flood. So just remember, I think I've said this about 20 times so far, if it can rain where you are, it most certainly can flood. So Heidi, would you like to put up our last poll question there?
I have our final survey. Normally I shoot for 85% participation, but this final survey I'm hoping for 100% participation on this. This is really kind of our report card. It helps us gauge if the presentation is really meeting your needs, if it's a topic that we need to continue to keep into this rotation, or if it's something that you find kind of not helpful. So any input into that is certainly welcome. We want to keep things fresh and helpful for you out there.
Excellent. Okay, while everybody's answering those, I just want to point out a couple of other resources here. Again, I can't talk enough about our nationalfloodservices.com website. We have our ebook library on there, our video library, claims resources, FAQs, industry news. It's just a wealth of information on that website now. Also, if you are an NFS agent, sign up to receive our NFS communications, because then you'll stay on top of the NFIP regulatory changes, system news and updates, training opportunities, marketing opportunities. We will not flood your email account with a bunch of nonsense emails. It's only going to be what is necessary, and you can actually pick and choose as to what services you would like to have. Again, our floodsmart.gov for the agents or consumers, take a look at their website. Again, they're partners with the NFIP. They offer a lot of information to help you market the flood policy. So if there is anything we can do as well, our agent development team email address is up there. Please reach out to us, ask some questions if you have them. We'd be more than happy to have that conversation with you. So Heidi, is there any other questions we want to address before we adjourn?
Angela wanted to know if this seminar qualified for continuing education credit. No, this particular webinar does not qualify for continuing education. It's for informational purposes only. I've also been peppering you in the chat line with resources. I have the summary of coverage out there, why you should think about having flood insurance or the risk of not having it. I have some of the fact sheets out there as a disaster assistance. I put a link out there to the community status book, so I've just been peppering them with information, Sandy.
Excellent. Well, with that, everyone, we will bid you farewell and hope you have a great rest of your day. And we'll leave the chat up a little bit longer. If anybody has any additional questions or comments one way or the other, let us know, and enjoy.